Hi there. I'm Dr. Emily Roberts of Personal Finance for PhDs. The following clip is from an Ask Me Anything we did with Sam Hogan on June 21st, 2023. Sam is a mortgage originator specializing in early career PhDs, an advertiser with Personal Finance for PhDs, and my brother. In this clip, you'll hear Sam's response to a question on whether there's a difference in being approved for a mortgage during, for example, your first year of your PhD program versus a later year in your PhD program.
I see a question in the chat, so we'll go to that. Can you discuss if there's a difference in being approved for a mortgage depending on the year you are in school? For example, I'm a rising fourth year PhD.
Yes, I can. So this is definitely what separates me from other lenders is that I've been able to close PhDs even when they had like 2 months left until graduation, where your run-of-the-mill loan officer would see that verification of employment and be like, oh no, like you definitely can't use this income. The way we present the income, history, and continuance, we're able to basically not convince the underwriter. We can demonstrate to the underwriter that the career path that this PhD is following does demonstrate the ability to repay their mortgage. So I don't want to discourage someone who's in the last year or two of their PhD. It would give me anxiety if you worked with some random loan officer though, because the chances of them picking up on that are very high. And we just have a good track record of knowing how to document it the best way for approval.
For anyone listening, the basic idea is that the mortgage underwriters and the mortgage lenders just want to make sure that you're going to have an ability to repay your mortgage for years going into the future, 3 years going into the future specifically. And so when you have a W-2 job that's like indefinite, unless you're in bad standing with your job, they basically assume, okay, this is going to continue for 3 years. We're going to approve based off of this. But when you're a student and you have, or maybe you have guaranteed funding, but it's only guaranteed for a certain time period, and if it's less than 3 years, then people start getting squirrely about it because they're not sure what's going to happen next. So Sam has dealt with so many of these clients that he's found a way, like he said, to demonstrate to the underwriters, well, yes, this particular funding source is ending in 2 months or 1 year or whatever, but look at this person's track record in academia and outside of academia, and they are a good bet for being able to repay the mortgage. So they have a specific way that they want to document that. So like he said, your average Joe lender off the street is not necessarily going to do that. But if you work with Sam or someone else who works intimately with this group all the time, they're probably going to have a process for doing that. Well, I know Sam does. I'm not totally confident about other people.
Thanks for watching this clip from our recent AMA. If you have your own mortgage question for Sam, please text or call him at 540-478-5803 or attend our next first-time homebuyer AMA. You can find the details for that event at pfforphds.com/mortgage.